I hope everyone is still enjoying the holidays. But remember, this is also a good time to just do some revision. If there's anything that you have been struggling with, please go and have a look at the videos, see if I've covered those topics. And if not, remember to let me know, and then I will make videos on those. So in this video, I'm going to have a look at fixed assets and specifically depreciation and asset disposal. I am using the content that we received from the WCD for the tutoring program. They've also had some sessions on this. If you have those videos, please also have a look at those. Okay. So before I even start with these video or the questions in this paper, I want to have a quick look at the basic steps involved in asset disposal, because it's crucial that you actually understand the steps before you attempt any of the questions. So I'm going to start with just the basic T accounts. Oh my gosh, that's not straight, but that's okay. I'm going to have a look at the basic T accounts without any amounts. So first of all, we're just going to have, let's say, vehicles, because they all work the same. So we'll have the vehicles account. This is your cost account. In other words, whenever you purchase new vehicles, you will record it on the debit side of this asset account. And then whenever you dispose of vehicles, you will show that cost of the vehicle moving out of the cost account, out of the vehicles account, with a credit entry. Then you also have the accumulated depreciation account, so accumulated depreciation. And remember that it's going to be specific. It's on vehicles or on equipment. So on vehicles. Right. Am I even now? Goodness me. What is that? I am not focusing, right? So vehicles. My brain is just not switched on during the holidays. So vehicles. It still doesn't even look right, but I'm just going to ignore that now. Right. Then we also have, first of all, your expense account, depreciation. Depreciation. Now nothing looks right. Spelling, depreciation. And then we also have asset disposal. Okay. Oh my gosh, my cat is doing something here and he's distracting me. That's why I can't spell. Asset disposal. Okay. Right. So what happens when we dispose of an asset is we are saying that some of the assets or all of the assets that we had since the previous financial year, so in other words, brought down from the previous financial period, we are now going to dispose of that asset, keeping in mind that this is my cost account. Okay, but if I then owned the vehicle in the previous financial period, it means that I also had depreciation that I accumulated on that asset from the previous financial year. So in other words, the vehicle that I'm now disposing of has a carrying value on the first day of the current financial year. And that carrying value is my cost minus my accumulated depreciation. So if I now dispose of this asset, I cannot only remove the cost of the asset, I also have to remove the accumulated depreciation that I wrote off on that specific asset. Then I have to keep in mind that this is on the first day of the current financial period. So the balance brought down the first day. If I dispose of this vehicle after the first day of my current financial year, so let's say my financial year started on the 1st of March and I dispose of this vehicle on the 1st of December, means that I used the vehicle, or I had the vehicle, I could have made use of the vehicle for a few months within my current financial year, which means that I had a depreciation expense. So that means that I also need to then calculate depreciation, record it, and post it to depreciation expense and accumulated depreciation before I can then dispose of the asset. So the steps involved in asset disposal is number one, I'm going to transfer the cost. So transfer cost. That means I am going to remove this asset from my cost account. So remove it here with asset disposal. So asset disposal. And I'm going to transfer it to my asset disposal. Oh, sorry, my cat just fell. I'm just going to pause this video real quick. Right, that was awkward. Okay, so I'm going to remove it from the cost account. I'm going to transfer it to asset disposal because I no longer own this vehicle. So I can't include the cost in my cost account. But I'm going to go to asset disposal and I'm going to say that I've now disposed of a, oh my gosh, come on, there we go, of a vehicle. Sorry, there's a bit of a delay here, but I think we are back. Yes, vehicles. Okay, so this is the transfer of the cost. Then I'm going to say that because I own this vehicle for a few months within the current financial year, I first need to calculate and record the current year's depreciation. So current year's depreciation. So I'm going to calculate that and I'm going to first of all record it in the depreciation expense account. So accumulated depreciation for the current year, and I'm going to record that in the accumulated account, right? Then step 3 is that I now have to transfer the accumulated depreciation. So transfer accumulated depreciation. So now I have to say all of the depreciation that I've accumulated on this specific asset that I'm now disposing of. Because I removed it from the cost account, I also need to remove it from my accumulated depreciation account. So asset disposal. So remember, asset disposal is a negative asset. Therefore, it increases on the credit side. And then when I want to decrease the account, I'm going to decrease it on the debit side. So I'm going to go to my asset disposal account and I'm going to say that I also had accumulated depreciation. And now this is a very important point where we are at now, because here you need to see that they have here your carrying value. Okay, very important. It's not going to show. No, it's not going to show now because I'm out of the space. So it's a carrying value. So sometimes they don't give you the cost and the accumulated depreciation amounts, but they do give you the carrying value. Okay, so cost minus accumulated depreciation is carrying value. Your next step, step number 4, is to ask yourself, how did I dispose of this asset? So in other words, did I receive cash for it? Did the owner maybe take this as drawings? Did I give this as a donation? So how did I dispose of this asset? And I'm going to now just say that we dispose of it for cash. So bank. And then you're going to enter your amount here. Then step number 5 is, did I make a profit or a loss? So in other words, what I paid for it, let me just change the color here. What I paid for it, is that more or less than the usage that I got out of it? So let's say got out. maybe that will help. Okay, so what I got out of it. So obviously, I want to pay less than the actual usage that I got from this vehicle. So if what I paid is less than the usage I got out of it, then I made a profit. That's good. So that is an income in your SOCI. If what I paid for it is more than the usage that I got out of it, I made a loss. And that is an expense that we will see in the SOCI as well. So an operating expense, and here an other income. Right, so those are the steps included or the steps that we follow when we do asset disposal. So when we approach a question, we're going to start off by, oh, sorry, this is just a thing that I need to not press on random things on my writing pad here, so please excuse. Right, so to approach this question, you need to first read through the information. Once you have read through the information, and it includes your question, okay, so you're going to start question, required section, read through your information to just get an overview of what it is that they have provided. Then you go back to the question, and then you will go to the specific information that you need for each one of the questions. So first of all, the information relates to the financial year ended 28 Feb 2025. So that means that your financial year started on the 1st of March 2024. I'm pressing buttons here. 2024 up until the financial year end of 28 Feb 2025. So you are looking for transactions that fall within that date range. And then the company trades in electrical items. Refer to the information below to calculate, first of all, the profit or loss on the disposal of the vehicle. And then number 2, the total depreciation for the year. Then information says that you have the extract of the trial balance on the 28th of Feb 2024. So in other words, you have your opening balances, and then 2025, you have your closing balances. For vehicles, accumulated depreciation on vehicles, equipment, you can see there's some movement there. You just need to now see if it's only purchases or whether this included some disposals as well. And then accumulated depreciation, only the opening balance. This over here makes sense because they told us we must now calculate the total depreciation for the year. So in other words, they want us to calculate the movement from opening balance, movement, and then to get to our closing balances. Okay, so fixed assets and depreciation for vehicles. An old vehicle was sold on the 30th of November. This amount was recorded, but no further entries were made. So that is why we see in the nominal section, we see asset disposal, cash received on vehicles sold, 91,500. So there we see it. And we know that we do not want to see the amount received in our nominal section. We want to see, did we make a profit or a loss on this disposal? Okay, so not the amount received. Then it says that details of the vehicle sold. It had a carrying value on the 1st of March 2024. We sold this vehicle on the 30th of November. So we still own the vehicle from the first day of the current financial year for March, April, May, June, July, August, September, October, November. So we owned it for 9 months in our current financial year. So that means that we cannot work with the carrying value on the first day of March for our asset disposal. We can't work with that only because we also owned it for another 9 months. Depreciation is calculated at 20% per annum using the diminishing balance method. So in other words, we are going to calculate depreciation on the
carrying value of the asset. Then it says that the depreciation on the remaining vehicles, so in other words, the vehicles that you didn't dispose of, that is 145,200. Okay. Then the next piece of information says that equipment is depreciated at 15% per annum on cost. So straight line method, fixed method, cost method, same thing. And then new equipment was bought on the 31st of July 2024. So in other words, now you're going to have a split between old equipment that you've had since the beginning of the year and then your new equipment. The reason why we do this is when we calculate depreciation, on the old ones, we own those for 12 months in the current financial year because they didn't tell us that we disposed of any of the assets, but we also purchased some new assets. The new equipment was only purchased on the 31st of July. So you had it from August. Remember, we don't count July because we purchased it on the last day. So August, September, October, November, December, Jan, Feb. So for 7 out of the 12 months in the current financial year. Oh gosh, now we're going south here with the writing. That doesn't even look like months. Okay, there we go. Right. So that's just to keep in mind when we do our depreciation calculations. Now, let's go back. What do we now actually have to do with this information? We have to calculate whether we made a profit or a loss on the disposal of the vehicle. So we go down to the information regarding that vehicle and we get to our answer book. Okay. So it says that the vehicle was sold for 91,500 and then the amount received was recorded, but no further entries were made. Yes, we are reading through all of that information again, but now we are actually really focused on what's needed for the profit or loss on disposal. So if we can go back to our steps, we need the cost and the accumulated depreciation on date of sale. If we do not have that, then we need the carrying value. And here it says that your carrying value on the 1st of March 2024 was 104,000 Rand. However, you didn't dispose of this asset on the 1st of March, you dispose of it on the 30th of November. So you need to still calculate the depreciation from the 1st of March until the 30th of November. So you're going to take your carrying value of 104,000 times 20%. But remember, this is per annum, and you only own this vehicle for 9 months in your current financial year. So times 9 over 12. So let's go here. So it's 104 times 20%. So that's 20,800, but only 9 out of the 12 months. So times 9 divided by 12, 15,600. So 15,600. There we go. Okay. Next up, we now know that we need to take, if we can go back here, we need to take the cost of our vehicle minus the accumulated depreciation minus the amount that we received for the sale to see whether we made a profit or loss. So let me write it here as well. So cost minus accumulated depreciation. Accumulated depreciation is equal to carrying value minus the amount that we received will tell us whether we made a profit or a loss. Okay, so remember, if you're carrying value, so cost minus accumulated depreciation minus bank, so in other words, your usage is more than, or is in a positive now, it means that you made a profit. Okay, so let's go and have a look here. So, where's my other thing, No, that's not what I'm looking for my answer. There we go. Okay, so we have here our carrying value on the first day, but then we calculated our depreciation movement for the 9 months in the current year. So our carrying value was actually not 100, oh man, not 104,000. It was that minus 15,600. You can see I haven't been writing on this thing for a while, although it never looked good anyways. So 104 is the carrying value on day 1 minus the current year's depreciation. So 88,400 is now my carrying value. So 88,400 is my carrying value on the date of sale. So your carrying value, you now first want to recover that amount before you can say that I've made a profit. Okay, so carrying value is your cost minus your accumulated depreciation. So in other words, what I paid for it minus what I've used thus far. And now we are saying that we received 91,500. So what I received is more than what this vehicle is still worth in my book. So in other words, what I paid for it minus what I've used thus far. There we go. Okay, so what this is actually saying is what I paid for it minus my accumulated depreciation, that is now the amount of 88,400. So 88,400 is my cost minus accumulated depreciation. When I now dispose of this asset, I received 91,500. Okay, so I'm leaving it here like kind of in the middle, but kind of more towards like vehicles, because the cost is always more than accumulated depreciation, because I'm not allowed to depreciate this to a value that is less than R1. So it means that my cost minus accumulated depreciation is still on the debit side because the cost is bigger than the negative asset. So it's still on the debit side. So 88,400 minus 91,500 that I now received for it. So can you see that what I paid, so what it's worth still in my books, is less than the amount that I'm receiving. So I'm getting a bit more now that I'm selling the vehicle, because whoever is buying it from me is willing to pay more than what I'm carrying that asset at in my books at this moment, because what I paid for it and the usage that I got out of it is less than what I'm now receiving for this asset. So it's my 91,500 minus my 88,400. I'm making a profit of 3,100. Okay, now I can close this thing. So 3,100 is the difference here. So that is your profit. So your final answer, remember, you need to write it in the answer column as well. And it's very important because they ask you calculate profit or loss. You have to indicate here that this is a, oh, golly gosh, profit. You cannot now ignore profit or loss. Okay, right. So a bit of a long explanation to get to it, but it's quick revision, or good revision at least, on the basic steps involved in asset disposal. So that's it. Now, the next question is, please calculate the total depreciation for the year. So you have now only calculated here, you've only calculated your depreciation for the current year on the disposal. So for your vehicles, on your disposal for the current year, remember you can't now forget about this expense. You use the vehicle for 9 months, and that amounted to 15,600. So 15,600. There we go. Then that's not it, because you didn't dispose of all of your vehicles. The depreciation on your remaining vehicles, so your remaining vehicles, or then old vehicles, I like to refer to it as old ones, but it doesn't matter. So the remaining ones also had depreciation because you owned it for the full financial year, and lucky for you, that amount has been given. Okay, so your total depreciation on your vehicles therefore amounted to 160,800. So 160,800. Okay, right, so that is it. Next up, we also had equipment. So equipment is depreciated at 15% per annum on cost. And the new equipment was bought on the 31st of July. So I'm going to go to my answer book, and I'm going to say that I know that I had old equipment that I had for the full financial year. So 12 over 12 months. Then depreciation on that is at 15% per annum. Okay, so I still need the amount. Then when I look at my new equipment, that I only had for 7 months in the current financial year. So the new equipment for 7 out of the 12 months. Oh my gosh, sorry, you guys. Okay, so for 7 out of the 12 months at 15%. And then I also need the cost for those ones. Righto. So can you see I'm writing all of my calculations? Very important in accounting. You cannot only write final answers. Always show all of your steps, just in case you make a mistake somewhere, and then you can at least get some method marks, hopefully. Okay, right. So the equipment started on 774,000 Rand. They didn't say that we disposed of any of the equipment. They only said that we purchased new equipment. Therefore, you have to know that if we don't say anything, nothing else happened. So the amount for the equipment that you started with as your opening balance, in other words, your closing balance at the end of the previous financial year, that is now the assets that you owned for the full financial year in your current financial year. I don't know what's going on with my pen now. 7.4. Okay, right. But to find the cost of your new equipment, you have to just calculate the movement between the prior year and your current year. So 48,000. So the movement, what did I end with this year minus what I started on this year to find the cost of the equipment that I purchased during the year. So times 48,000. Okay, right. Oops, what am I doing? No one knows. No, oh my gosh. Okay, let's try this again. That's what happens if you have too much going on in the background. Okay, right. So we have our 774,000 times 15% for the full financial year. So 116, I just want to double check that I think I said 10% times 0.15. Oh, no, I didn't. Okay, so 116,100. 116,100. So that's on your old equipment. Then you also purchase some new equipment for 48,000 times 15%. But you only had that for 7 out of the 12 months in your current financial year. So 42,000. 42. Is it 42 or 4,200? My gosh, 4,200. That's what I thought. Okay, so 4,200, and it looks terrible. 4,200. Doesn't really look much better, but it's okay. It's thought that counts. Okay. So you had total depreciation. Remember, total meaning vehicles and equipment. So you had your 15,600 plus your 145,200. That added up to your 160,800 plus your equipment that you had for the full financial year plus your equipment that you purchased in July. So 281,100. 281,100 is your total depreciation for this year. And that is it.